Hello, everyone. Thank you so much for joining us for the post-lunch shift. We're very excited that you're here. We've got 25 minutes, so we're going to get right into it. I'm Elise Soucie, Executive Director of Global Digital Finance. We are a nonprofit industry association that works for best practice and standard setting across the digital finance ecosystem, anywhere from digital natives and protocols to big banks. We work on a lot of policy issues and also aim to be a bridge between industry and regulators. We'll get right into our first question now. Eric, if you could tell us a bit about yourself, but also industry's been talking a lot about product market fit. Tell us a bit about Messari as well. What was the gap it set out to fill? And a bit about your journey as its very first employee.
Yeah, absolutely. So my name's Eric Turner. I'm CEO at Messari. I actually joined the company as the first employee when we started back in January 2018. So I've worn many hats. I actually started out as our head of research. Most of my career before that was doing research in finance. So I worked at Fidelity and S&P, and very much as a research analyst for a while. And then worked more with our product team and our sales team, and ultimately ended up where I am now. But on the question of Messari and why we started the company in the first place, this was back, we really conceived the idea back in 2017, and this was when we saw the first wave of ICOs, and we saw everything happening where people were raising 10, 20, $40 million to build out all of these networks and protocols. And what we didn't see at the time was a lot of transparency into what was happening in the off-chain world, I guess as I would say it. So you could see, if somebody launched a mainnet, you could see how many users were on-chain. But when it came to all of the information about who started this project, what was the roadmap, were they actually going to be able to build the things that they said they were building, none of that really existed. So our original thesis when we started the company was there should be disclosures within the crypto industry. So this was 2018. We started with a disclosures registry. We worked with about 50 networks and protocols, and what we quickly realized was, I think we were early for disclosures. I think people weren't going to do it if they didn't need to. And I also think that the qualitative and the off-chain side of things is really only one part of the puzzle. And if we want to think about transparency and we want to think about bringing better data into the space, you do need to couple that with on-chain market data, all of the quantitative data as well. So for us, we started with the disclosures on projects. We worked closely with all of these projects. We built out the data side of everything, really built out what we think of now as our market intelligence product, which is one of our core product offerings. But the actual thesis that we started with and our mission hasn't actually changed. It's flipped on its head to some degree. So we still work with a lot of projects. We actually work with 100 of them now on quarterly reporting and transparency reports. But what we've realized is we have the internal resources, we have the data science team, we have the research analysts to make this easier for projects. So we're not putting the burden of disclosure on them. We're actually doing a lot of this, working with them and building out this reporting and then having them check it over and say, does this make sense? So fit-wise, I think we were early on the thesis. I think now, because the industry's matured so much and you actually do have regulation in place that is going to require things like white papers and standardized disclosure, it's come full circle. And for us, it's been really exciting to see, because I think transparency's always been needed, but it's good to see that people have really come around to that realization that we're at a time where it is now absolutely necessary.
And I think that's a really good point that you are making, is that when you say it was too early, is one, there wasn't, the regulatory understanding there either. So none of this was mandated, whereas now it is. But truly, and I'm sure you're aware, this is one of the great strengths, actually, of using new technologies like blockchain, is that it can actually be more transparent than the previous system, and we have an opportunity to do things better. But I want to unpick something you said, which is that you have flipped it on its head a little bit. And so we were kind of talking just before the panel about the different roles you played, all the way from kind of sales to CEO. How has the business changed? Because you said you're kind of, primary goal hasn't, but I'm sure there have to have been some evolutions from 2018. So how have you seen those transformations at Messari take place alongside the kind of evolution of both industry and regulators?
Yeah, so I guess it would make sense to just explain quickly, who our customers are at the end of the day. So we work closely with, on the market intelligence side of our product, really large exchanges, custodians, wallets, asset managers, VC firms. So I always like to say we don't really work well with people that are just doing in and out high frequency trading, because we have what we think of as a very robust market intelligence product. And then we also work directly with a lot of the projects themselves, so the networks and the protocols. What we've realized since 2018, when we think about building out a useful product for those end users, I touched on this, in the intro, is the on-chain data, the market data, the numbers themselves, they're super transparent in this space. I mean, that's what's really unique about this industry is you can go and you can see all of the on-chain data, which is great, but for most people that doesn't really matter because they don't understand the context of it, right? So what we've realized is, yes, it's great, you can see everything on-chain. I think for us that are super crypto native or we're really into one ecosystem, we can learn how to use block explorers, we can learn to understand these data sets. But for most people that we work with who are either just so large that they don't have the time to do that, or they are financial institutions just getting into the space, so large banks that just really want to understand how they're going to be able to work with crypto, how they're going to be able to build products and services for their customers, people want to understand that context. So that's why, for us as a firm, we've actually spent a lot of time building out the information layer on top of quantitative data. So we've built out different tools, like an intelligence tool that covers all of the updates happening on protocols. So new software releases, changes to tokens, token unlocks. Again, if you're looking at things from an on-chain or a market price perspective, those are going to be the actual catalyst events that are actually causing some sort of change. And that's helpful for investors. That's helpful for people that are building that ground level infrastructure to understand, hey, this software upgrade unlocked a bunch of TPS. The network is now moving a lot faster, and that's why we see these changes on-chain. And I also think that level of information is really helpful for regulators, because I think in the absence of having the context of what's happening on these different blockchains or in these different protocols, it's really difficult for regulators to make informed decisions. And we've seen this, over the past 4 years, I'd say. I mean, I'm based in the US, so obviously the regulatory situation there is a little unique
different.
right now. Yeah, I think, different, unique. But when we think about building out our tooling and some of the things that we're going to be building out over the next couple of quarters, it really is to help regulators understand what's happening with projects, put it in an easily digestible format. So when we work with protocols, put it in like what people are used to in a standard quarterly type report that they might look at when they see a company filing, when they see a traditional research report. Make it approachable for people, add the context. And I think that education is going to go a long way. And I think especially, when we look at some of the regulation that's coming out. So we look at MiCA and we look at some of the frameworks coming out potentially in Dubai and all these other jurisdictions. That is at the heart of what the regulators are looking for, is they are looking for some degree of investor or user education. You look at the public-facing requirements of having a white paper on a token project. That's not just a check-the-box compliance exercise, but it's been very thoughtfully laid out where it needs to be accessible to everybody. It needs to be accessible in multiple languages. The regulators want this to be something where if I'm going to go buy a token, I'm going to start using a network, I can have all of that information at my fingertips. And I think that's where we've seen the evolution is, yes, we had the data early on, but over the years, we've seen the context on top of that data become so much more important.
I think that's a really good point, and I completely agree. I think we've seen this evolution on both sides where there's one, the regulators have to be educated to learn how the technology can be used, how they can understand it, how they can have that context in order to meet their objectives of investor protection, consumer protection, but then also on the industry side to meet those requirements, because a lot of times, and I empathize very much, as brilliant technologists and coders, but not necessarily who have spent time on the institutional world, reading regulation, which I'll be very honest, is not always the most interesting, and that's totally fair. And so I think there's been that evolution on both sides. But on the theme of kind of institutional side of things, we have seen so much more institutional adoption this year. We conducted a piece of research as well looking at trends across the industry, and broadly, I think it's safe to say it's absolutely occurring. Now, did you guys see this coming in terms of the trends in institutional adoption with these big names? And when you look at the numbers, how has this shift kind of impacted the true crypto industry?
Yeah, so the interesting thing that we've seen happen on the institutional side, and we meet with all of these institutions, the ones that have been here for years, the ones that are just dipping their toes in, and have these conversations. And I think the interesting thing that you saw happen over the past couple of years, I'd say really since the big DeFi summer back 2021, 2022, is in previous cycles, having worked with large institutions, what would happen is you would see a bull market in crypto, you would see a bank hire a team to build out their digital assets practice, and then you would see them lay that team off, right, when the market went down. So it was very much like we are either all in or we are completely out of this industry. What we saw in this last cycle was that didn't happen. A lot of these digital assets teams were still around. They were still doing things, within banks. Like, I think you don't realize what the institutional adoption side looks like when you see things like Jamie Dimon say Bitcoin is a scam. JP Morgan has hundreds of people working in their blockchain division, right? So what we saw this last cycle was those teams stuck around, those teams kept building because they did see that there would be demand. When the market came back, there was demand for things like trading, for things like custody, and I think when we saw things at the beginning of the year, like the Bitcoin ETF launch, I wasn't incredibly surprised because I know that for the past 2 years, this has all been going on behind the scenes. People have actually been making that push, and it's so different than it was in previous cycles. We've always said the institutions are coming, they're coming, they're coming, if that matters at all for this industry. But we didn't have that same internal push that we saw over the past couple of years. So I think what that's created when we look at the macro right now within the crypto industry is you almost have a tale of two markets. So you have true institutional adoption happening where we have things like the incredible success of the Bitcoin ETFs. I don't know if everyone's seen this, but in the U.S., some large banks starting to get the approval to start offering custody for their customers, right? You start to see where the dominoes fall, and that's going to be massive when you have someone like a BNY Mellon being able to offer custody. They are the largest custodian for traditional assets to funds that want to custody crypto assets. And then you also just see, the massive rise in adoption of stablecoins. That's been incredibly, successful, that entire sector, over this past year. So we have this really strong institutional side. I do think it's primarily been focused as an asset on Bitcoin. And then the interesting thing there is institutions are actually building on public networks now. If you ask me in 2018, would that happen? My hope would have been yes, but we had a lot of enterprise blockchain solutions. I hear from a lot of institutions that having the ability to be on a public network really matters for them. So we've been really excited to see that. And then when we look at the entire crypto landscape, there may be little pockets of things that are happening. We've seen like meme coins and all these other things, but my personal hope is that we see that middle start to fill out, where people start to get really interested again in DeFi applications and DePIN and all of the things we're doing around scalability. I don't think we're quite there yet, but I do think those two worlds start to converge, probably over the next 6 to 12 months.
Yeah, completely agree, and I think especially, your point about public chains is very interesting as well, and I agree. What's different, I think, in this cycle too, is that regulatory side, where before you had, Basel, for example, saying that they were completely against any type of sort of permissionless chains. Now you see institutions, as you said, like SG Forge, who are actually able to use them, and so I think that we are seeing that movement, which is very encouraging. But on the other side, crypto, you mentioned meme coins, it's an industry that thrives off of lore, but you're very much in the data. So what are people saying versus what is actually happening? And how would you summarize what we've seen in 2024 by the data?
Yeah. So getting back to my previous point there, I think we're I always hear this debate, right? Are we in a bull market? Are we in a bear market? That's just the constant conversation that we're having. And I don't know if everyone agrees with this, but I actually don't think, you look at Bitcoin, it's, 65K. I mean, we've seen the market go up. We've seen things be pretty strong in terms of market price this year. I don't think we're close to being in a bull market, though, honestly. I mean, I think I look at, I look at the numbers, I look at the flows. I think we've seen external capital flow into Bitcoin ETFs, but compared to previous cycles where we've seen external capital flow directly on chain, and as we know, once things are on chain, it's pretty easy to move from chain to chain, token to token, especially with all the bridging we have now. So I think there's a sentiment from a lot of people that we are in a bull market, at the start of a bull market. I would probably take the opposite side of that, just because the capital that's been coming in has primarily been into Bitcoin ETFs and some of the much larger assets. When we look at everything else and we see where people are raising money and we see where trading's happening, again, you see small pockets. DPIN has decentralized physical infrastructure, so things like Helium and a lot of those things. Those have been popular, I think, over the past year and a half. Again, I have to mention it. I think you go on crypto Twitter and everyone's talking about meme coins, and great, like people have been making money off of those, but we haven't seen that be external capital coming in the space to build new things, right? That's primarily been people that have been in the crypto space, people that are traders, people that are speculators. That's all fine and good, but for me to start to believe that we are going to be in a true bull market, and I do think this happens sooner than we think, what we need to start to see is people coming in from outside the current crypto space, fresh funds flowing in and being used to fund companies and frankly do things on chain, right? Until we have that capital actively on chain and doing things that are interesting, and I love the Bitcoin ETFs, don't get me wrong. I think that has been so tremendous for our industry just in terms of credibility, but that capital's not doing much. I mean, it's sitting in an exchange-traded product custody somewhere. So I think that on-chain component's going to be really important, and if you're looking at the data, I think once you start to see those metrics tick up, that's when I think we're going to start to see a shift in the market.
So 2024, not a bull market yet. Reminder, if anyone has any questions, I'm going to move us to our last question, but if you have any, please feel free to put them in Slido or just shout at me, that's totally fine. But on our last note then, looking ahead to 2025, and we were talking about this a little bit before we came out here, what do you see as the trends coming? I know we talked a little bit about M&A. Be interested to hear you unpick that.
Yeah, so I think two things there. So, we do a lot with just looking at fundraising in the space, looking at M&A. A lot of our analysis is based on this fundraising screener that we have on Messari. And I talked to that team that builds that actually looks at all the data that's going into there. I think one thing we're going to start to see, and again, this is very dependent on some macro aspects as well. So I think from an investor side, we're going to need to see more IPOs, not just in crypto, but in general. VCs getting money back, institutions starting to have some dry powder there. But I do think what we're going to see in this space, probably 2025, again, 6 to 12 months, is more consolidation of the infrastructure space. So people that are building crypto data solutions, people that are building infrastructure solutions, maybe exchanges. We saw that with Robinhood and Bitstamp. I think we're going to see two things there. So I think we're obviously naturally going to see consolidation in that space where it's essentially just a competitor buying up a competitor. I think that's healthy for the industry. I think we have a lot of solutions right now, and the market isn't that massive. So I think that's natural to see. But what we were talking about as well is I also see some really interesting M&A where platforms start to expand and create unique combinations. So we were talking about this because I don't know if everyone's seen, but I was just reading that CoinDesk acquired CryptoCompare CC Data, which has a market data and benchmark product. And it's just interesting to see that evolution of what has historically been a media company, now acquiring and building out their own benchmark and data products. And you can see this becoming the evolution of these more full service market intelligence type products. We've seen Nansen acquire a staking platform, and that makes sense. I have a bunch of people that are using this platform every day. They're looking where they can stake, they're looking where they can invest. Let's just build it into our product. So I think this next year is going to be when we see a lot of those unique combinations happen. And I think that's going to be somewhat dependent on the external capital markets. But this gets to my second point where I do start to think that we're going to see some pretty strong crypto markets. And I think as we see the success of things like the Bitcoin ETF, as we see maybe more regulatory clarity in the US, and we start to see things like MiCA come into place in the EU, which gives people a strong position to operate their businesses from, we're going to see investors start to actually allocate capital into, let's call it everything outside of the top 2 crypto assets by market cap, because I think those have been invested in the past. We have ETF solutions. There's a lot of support for those. But I do start to think you're going to see more of that. That's what we saw in 2021 into 2022. And as you see, you know what that flywheel's like. As you see crypto market prices start to move, you see interest come back into the space, you see capital flow back into the space, and then you see the ability to unlock some of those unique M&A deals. So that's my prediction for next year. If I'm wrong, I'm not going to say, well, it's going to happen in 2026. If I'm wrong, I'm wrong.
Come back and find us next year. But okay, last question then, and I completely agree on the M&A point, and I think we see this across tech in general, not necessarily just crypto markets. You see it with the kind of diversification that Apple tried to do, for example, coming kind of into the wallet banking space as a tech company. Fascinating, which we don't have time to cover, and I promised them we would stick to time. But rapid fire for 2025. What are your top 3 jurisdictions to watch, both from a markets perspective or a regulatory perspective?
Ooh, I might get myself in trouble with some regulators
in
here.
1 minute.
So I think when I look around the world at some of the jurisdictions that are going to be most interesting, I think no-brainer, obviously, I think EU. With MiCA coming into place, all of those regulations being phased in, I think A, because there's going to be clarity, and B, because businesses in places where there are not clarity are going to look to open up operations, not necessarily move, but open up operations somewhere where there is clarity. That's the EU. I think Dubai's interesting with what VAR is doing in terms of trying to build a crypto-first regulator. And I think the most important thing to watch is going to be the US, because I think we have right now an election coming up. We have a lot of change happening. And I think no matter what happens, realistically, crypto's become such a big talking point for politics that we're going to see something happen. And I hope what happens is that we start to see some sensible regulation put into place over the next couple of years.
I hope so too. Thank you so much, everyone.